Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. Late last year, a few bullish patterns started to emerge that eventually led to late October 2023 to early February 2024, imperfect, breached, now broken, bull channel. I'd previously suspected the breaking of this bull channel was due to the crossover 14 weeks ago, the upper bull channel line with the significant neckline, currently at 185.55, of the large January 2020 to April 2021 reverse head and shoulders bottom. The one highlighted in green on my daily chart, yeah. Whatever the reason, the break higher over the upper bull channel line eventually led to a move up towards a combined resistance in mid-December last year, a November 2014 high at 201.35, and the 50% Fibonacci line of the February 2022 to January 23 move at 201.70. Plus, I suppose you could also throw in the bright red declining neckline, currently 201.10 of the April to May 2022 reverse head and shoulders pattern. Between them all, the market's rise was halted and turned back down through the bull channel for the first time, and eventually stopping down at the combination of the congestion around the purple highlighted 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, and the August 2021 low at 174.5, all done in and by the middle of January. We've since moved back up during late January and mid-February over the congestion between 187.40 to 187 even, but not really stabilizing over this congestion, with returns lower back towards and below the 2016 high at 179.55, and all the way to test the important 50% Fibonacci line of the June 2020 to February 22 move at 177.45, which has the rising medium moving average highlighted in mauve, currently at 180.05, acting as a backup. All this action allowed me 2 weeks ago to draw a dark blue December 2023 to February 2024 bearish Andrews pitch hook, which I have since finessed. I did warn you about this. Since finessed to a bearish shift pitch hook. The market's currently in between the upper time above, that's currently at 190.5, and the middle time below, currently at 179.05. Now, I was not in love with the earlier bearish Andrews pitch hook, which I have since retired, nor am I in love with this current bearish shift pitch hook. However, it is there and does fit despite the one aberration of a close over the upper time, which had no follow through. I would on balance just like you to watch a few things that might indicate any such moves are in the offing. Firstly, there's that rising medium moving average support highlighted in mauve on my daily chart, currently 180.05. As I said last week about this moving average, and I quote, "This may temper any bearishness and is one to watch for the next few weeks," end of quote. Secondly, still keep an eye on the previously tested and still holding strong support of the purple coloured 50% Fibonacci line of the May 2019 to February 2022 move at 174 even. This is a key level to watch on the downside, especially on any significant confirmed break below it, and even more so if, thirdly, prices break down through the flatlining long moving average below. That's currently at 170.10. On the top side, well, I've already detailed the top side resistances, but just to recap, the green neckline, the short medium moving average, also in green, the 2015 high at 187.80, and for a lack of a distinct topside high, I'd add the lesser 38.2% Fibonacci line of the May 2019 to February 2022 move at 194.40. London coffee. During the process of the market breaking higher, originating back in December last year, prices ended up starting to stabilize, right on the 50% projected Fibonacci line at 30.83. However, though this 50% Fibonacci support did not last, it did start a process of stabilization that ended up with a late January 2023 to early March 2024 halfway hesitation between roughly the lesser Fibonacci congestion at 30.16 to 30.18 up to the January 2024 high at 32.61. As this was happening 2 weeks ago, we had the short medium moving average currently at 30.82 enter the frame and turn prices higher. In the process of making this halfway hesitation, the late January, early March action also became a small bear channel come declining, expanding wedge pattern. And that's currently 29.71 to 32.04. Now, I personally favor it as a wide bear channel for now. In the middle of last week, prices shot up through the upper bear channel line and stabilized over it by last week and also by this week. This now lays out all sorts of possibilities topside. Thus, we'll start with the bull channel, and for that, we had a primary target in the 32.60 area and a secondary target in the 34.25 area. Both these targets have been achieved. Next is to look at the bear channel as a bullish halfway hesitation, and for this, there are 2 points from which I would consider starting from. The first is the January low at 27.44, and the second is from the mid-December 2023 start of rally in the 25.20 area. Thus, for the first pattern, we would have a potential target in the 34.80 area, whilst the second origination would see a potential up as far as potentially target X1, which is in the 3700 area. The 34.80 is not too far away from the market. That's target X. This second one, though, is obviously far harder to achieve, and I'm wondering if both may be retired if New York Coffee ends up breaking the medium moving average on the downside, or even the short medium moving average.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.